morning. Good Wednesday morning. This is our third mini class on investing. So by this time, after watching the first two videos, the bonus video, you should have already started your investment account. Some of you have already gotten that done. Some of you are still in progress for getting that done. And you funded your account, and you may have already made your first buy, or you're getting ready to make your first buy. Now, I get a lot of questions on, is now really the right time to do this? The market's crazy, or how can I time my buys? And basically, this is what I did when I first started out, is I made a consistent habit to make buys based on my paycheck. And I did it regularly, no matter when the market was up or when the market was down. And a lot of times you're going to hear news and marketing and things like, oh, it's up, oh, it's down. Well, you know what? It goes up and down every day. And as I said before, this is a marathon. It's not a sprint. It's not a get-rich-quick overnight scheme. It is a strategy for building wealth. Rome wasn't built in a day, and neither is wealth built in a day. So this is basically called dollar cost averaging. You don't really need to worry about ups and downs, especially the longer time frame that you may have. If you have started a UTMA account for your children, this is in America, that's an account that you can start for your minor children. It doesn't matter. We're talking about retirement accounts and wealth accounts. They probably have 40 or 50 years. And that's 40 or 50 years of compounding, where the ups and downs that seem wild today are just going to seem like a little tiny blips. So that's what I did, and it's dollar cost averaging. Now, we got paid monthly, so I made buys once a month. But you know, when I did that, I realized that that only gave me practice for 12 times a year. And the more that you practice your buys, the more that you look at those screens, you're going to learn more. So what I did after that is we got paid once a month. I took that check that we had decided on putting into the stock market, and I split it up into 4 equal amounts. And then once a week, I just picked a day to automate it. Let's just say Mondays. Every Monday, I would go and I would take that specific amount and I would just buy something. Now, we'll talk later about what exactly to buy. But I had a list of stocks and I would just add to my positions. That's it. Every week, on Mondays, I would just add to my positions. And this is really not a complicated thing. You can have it as simple as you want, and you're going to have amazing results. Now, if you want to amp it up, if you want to work on buying the dip or timing the market, that could be the next step. If that's your personality, if you want to do it, if you want to get into it even deeper. If you don't, that's okay. That's 100% okay. These strategies will work. It's what the wealthy use. But if you want to look at the markets, if you want to set up alerts with your brokerage or with TradingView, you can set it up to get alerts when there is, you might shave a couple of pennies or even a couple of dollars off of the specific stocks you're looking at. All right, I think we had a little blip there in my connection. The bottom line is, even the most advanced money managers and hedge market fund managers that are dealing with millions and millions of dollars, they can't even time the market. And they're educated, and that's their entire full-time job. Timing the market is a fool's game. Dollar cost averaging is going to get you in, and it's really the slow and steady and consistent habits over time that will get you results. And that's actually with anything, whether you want to lose weight, learn a new skill, that's going to happen with anything. But sometimes, like we've seen today, there's a huge market correction. Nobody's getting it right at that bottom unless they're insider trading, unless they're the big people. Honestly, the politicians, the Speaker of the House, it's obvious they do insider trading. It's not hidden. Every 45 days they need to put out what sort of trades they've done. It is public record, and it's pretty obvious. That's what goes on among the elites. We don't have that advantage, but we can still use these things and these techniques in the market to build a really strong portfolio that will fund your retirement, that you can leave for your heirs. That's why this is so important. It's not taught in schools because, I mean, you can guess why. There are people that do not want the little peons to know their secrets, to live independently, because the world runs on debt. There is an advantage for us to be debt slaves and consumers because that makes other people rich. But these techniques will help us become self-sufficient, building our wealth one step at a time, leaving a legacy. So that is it. Carmela, I see you're on. So good to see you. If you guys have questions, definitely send them to me or put them down below. But don't worry about buying the dip or timing. Just get into the market. Once you're in the market, once you look around, things are going to appear very different than they look on the outside before you get in. So make your buys, decide when you're going to do it, be consistent, and things will start to amp up and build up slowly. All right, I will see you next time for mini class number 4.